This is part 7 of our video series with our example question LSL Plc, and we are now looking at our general ledger T accounts. And so far we would have looked at the general journal, and we would have placed our premises account there, our equipment, and ordinary share capital. The other account that we can find in our general journal that is new is one called JAD Inc. This is a creditor. This person, we would have bought equipment from them on credit. So we're going to do an account for JAD Inc. There's no balance in the account, so you don't have to worry about that. So after we've picked up those accounts from the general journal, we will then go to the cash book, and the account that, before we go to the cash book, we have to do an account for our sales as well. So we're going to have a sales account because remember, this total must be transferred to the sales account. We are going to have a purchases account because this total must be transferred to the purchases account in the general ledger. We're going to have a sales return account and a purchases return account as well in our general ledger, because you must remember that there are 4 accounts that deal with the movement of inventory in and out of the business, which are sales, purchases, sales return, and purchases return. So those 4 accounts deal with the movement of inventory in and out of the business. The same way that we have 4 accounts that are dealing with the movement of inventory, we also have 4 journals that deals with the movement of inventory in and out of the business. So you have the sales journal, the purchases journal, the sales return journal, and the purchases return journal. And these are dealing with credit sales and credit purchases. So in our general ledger, we will have an account for sales. We will have one for sales returns. We will have one for purchases. And we will have one for purchases returns. So we have those accounts. And in our cash book, we have discount allowed and discount received. So we must have an account in the general ledger for discount allowed and discount received as well. So we have a discount allowed and a discount received account. So then we will go to the cash book to see if there are any additional accounts that we need or any new accounts. So when we look in the cash book on the debit side, we see that we have share premium. So we must have a T account for share premium, and we must have one for rent received. So we're going to do those. We're going to have an account called share premium, and this is to record the extra money. This is to record the extra money that the LSL Plc would have received from the issuance of those ordinary shares. And we have rent received to record the money that they received from the tenant. So that's on the debit side. When we go to the credit side, we are not looking at Junior Jordan or Sheena Grimes. We're not looking at JAD Inc. We're not looking at bank, because Sheena Jordan and Junior Jordan and Sheena Grimes are in the purchases ledger. We already have an account for JAD Inc. So we have to do an account now for wages and dividends. So we do one for them. So you have a wages account and a dividends account. So I think we have all of our accounts now. So what we're going to do is we're going to enter all the transactions in this account. So we would have already entered our transactions for premises, and there were no more transactions relating to premises. There were no sales, no purchases. So that balance remains the same at July 31st. So then on August 1st, 17,000 debit. With respect to equipment, we started with $11,353, and in the general journal we see that there was a purchase of equipment for $3,395 from JAD Inc. So we're gonna put in that, and that was on the 27th of July. So therefore, there were no sale of equipment. So therefore, at the end of July, the balance carried on for equipment is $14,748. So that's an ordinary capital. The ordinary capital started with $24,720. And then on July 17th, there was an issue of additional ordinary capital, ordinary shares of $4,000 at a par value of 75 cents. And the premium was 25 cents. So we are going to record the money received from these shareholders. Bank would have been debited here. The extra money for our share premium, bank was also debited. So we are going to go to the capital account and the share premium account and credit those for those figures. So this is on the 17th of July. Bank, $3,000. That's the capital that was raised. And therefore, 31st of July, balance brought down, carry down, 27,720. 1st of August, balance brought down, 27,720. So we go to the share premium account as well. Do that one time, and we record the extra money they receive because the bank account is debited with the $1,000 for the share premium. So the share premium account on July 17th will be credited for that $1,000. So at the end, 31st of July, there's a balance carried down of $1,000 on the share premium account. So we're balanced, we're putting in our transactions, we're posting and balancing at the same time. So we've completed there. Ordinary share capital. Let's look at JAD Inc. We see in our general journal, JAD Inc. is credited for $3,395 with respect to the equipment. So we will go here on the 27th of July. Equipment, 3,395. And then you look to see if any payments were made to JAD Inc. And on the same 27th, payment was made, which was the down payment of $2,500. Bank is credited, so JAD Inc. is debited. 27th of July, bank, $2,500. So 31st of July, balance carry down. The credit side is $3,395. Debit side is only $2,500. So difference falls here. $895. So we look at sales. So in our sales account, the first thing that we will look to record in our sales is if we have any cash sales. So the first thing you will record is any cash sales. To find out if you had cash sales, you look in the cash book. So when we look in the cash book, On the 12th of July, there's a cash sale of $2,165. Bank is debited, so the sales account will be credited. So that is on July 12th. So 12th of July, bank $2,165. So we record the cash sale first. And then you go to the sales journal and you're going to record the total credit sales for the month here inside of the sales account on the credit side. So you take this $1,595 and transfer it to the credit side of the sales account. So 31st of July, total credit sales $1,595. So that's the total credit sales, $1,595. So our total sales for the month $3,760. Credit side, debit side 0. So 31st of July, 3760. So then we look at our sales return. So we're now on to the journals to pick up totals. So in our sales return journal, there is a total of 150. Remember, if we have several returns, you will have all of those people listed there. The individual amounts will go to the individual T accounts, but the total will be transferred to the sales return account. So we have a total of 150, which will be transferred to the debit side of the sales return account. So that is on the 31st of July. Total sales returns 150. There are no other transactions there. So at 31st of July, the balance carried down 150. So then we are going to look at our purchases and pick up that total as well. So in our purchases account, we're going to look at our total credit purchases, which is $1,686. We already transferred the individual amounts to these accounts in the purchases ledger. So we are now transferring the total to the purchases account in the general ledger. We also, when we're looking at the purchases account, you have to look to see if there were any cash purchases, and you will find cash purchases on the credit side of the cash book. But when we look here, we do not see any cash purchases, so we don't have any. So therefore, we just enter the total for the credit purchases. So that is on the 31st of July. Total credit purchases $1,686. So I highlighted in green to show that these are the totals that I pick up from the journal. The journal I have highlighted green and in red. So I do the same thing in the account to show that that's the total I picked up. So then on the 31st of July, the balance carried down 1,686. So we have almost completed our accounts. So when we return, we're going to look at the purchases, return, discount, allowed, discount, receive. We've completed our share premium. We're going to look at rent, receive, wages, and dividends, and that will complete our ledgers, and we will then go into preparing our trial balance. So stay tuned as we continue this question.